Alright, so I'm going to go over this trend. What you see is this rally over here, and you have the pack over here, the group, confirm it, pulls back, there's a lack of supply, and that right there means there's a shift from weakness to strength. Alright, now it's just a matter of getting in. Okay, so it's not easy if you're going to try to get in over here. The market, it went to this high and then reversed kind of hard because, on the open, things just reversed. So the best place was really to get it over here, down here somewhere. But you don't know if it's going to reverse or not, so it's okay. Then the market opens and did all this up and down nonsense over here, and that's fine. But this was the rally that gave it away. Why? 11,000 contracts were bought right there. And it looks like a regular rally. There's a lot of buying, but you're not really sure. I don't know. But on the point figure chart, that rally is this column with this volume. That's very bullish volume. So that rally, may look okay. They're buying, but I'm not sure. Is it strong? Is it not? But as soon as you see this, with just a different view of the supply and demand, look at the volume that came in here, and look at how aggressively they bought. So that is this, and that's all. I mean, from that point, it was gonna go up. All right, but now I want to see where the pullback trades are. So rallies on 11,000, pulls back on 7,000, up on 4,000, and then it pulls back again on what is this? 2,000. So that was the place to get ready to initiate the long, if or just get it on their test. That right there. After what? After supply evaporated, diminished, left, after it was gone. Right? That's the point where I guess you could call it last point of supply or something like that. It doesn't matter what you call it. The point here is demand is there and supply is going away. The force of supply has diminished, allowing demand to continue. And then you had another signal here where you have market up on 7,200, pull back on 5,900, rally on 19,000, pull back on 2,300. The signal kind of fell on top of it, but the pullback is about 2,300, just like this one. And that basically said again the supply is gone. But this is important, because it's not just okay, supply is gone. You see, if you're looking at price, you see a big red bar. If you see price again here, you see a big red bar. The red bars are misleading. The red bars are misleading. They're not giving you the right picture. The right picture has to be with both price and volume and time. because that red bar lasted only 5 minutes and drew out the smallest amount of volume here, and volume is going down. So the force of supply again diminished. So what do? You wait for the green bars. As soon as you get follow through, click, buy the pullback right here, and it rallies. Okay. Now over here, you got rally, and supply comes in and rallies, but it's still in an uptrend until this point where you have the heaviest volume in the trend. The heaviest down volume in the trend is 8,200. That's the biggest volume, and there's price action behind it. And observe the quality of this rally. Red, 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 red. And it has ease of movement here. Okay, because they wanted to break the lows. But anyway, so there's ease of movement, there's volume, there's pressure, there is a lower low as indicated by the salmon colored line. That right there is your sign of weakness or your change of behavior. I've seen other people call it change of character, or just supply, like heavy supply. Right off the top, because that's if you see what happened here, they up thrusted. So it's the highest point, and smart money sells highs. So you know, go up thrust, and smash. So I like this a lot. It pulled back on a low volume pullback, and again down on heavy volume. And look at the pullback. You have 13,000 down, 1,900 up. The pullback they're very weak. So from that point on, supply took control. Anyway, so I really like this trend here because A, it's tradable. B, it makes sense. Everything was aligned, and we'll see if the market starts doing this more often, because it was really horrible the way it was behaving for quite some time, um, doing things that didn't give pullbacks, so stuff like that you just have to stay away from until the market starts trending in a clean and orderly way, because those are the only way you're going to get low risk trades. Only way you're going to get low risk trades. All the other, like if it does this, can you trade this? No. You get stopped if you go long here. By the way, this important point, like this initiated this rally. Why, I knew that this is going to be um, an uptrend or a nice move, because they screwed everyone. Right here is a spring. See that? So it's interesting how this was done, because if you're long, you know, if you're long here, you're out here. If you're short here, you got stopped out on this upthrust. If you're long on that upthrust, you got stopped out on the spring. So it was as if there's a something Wyckoff said about the market. They try to test all sides to find out which side they can move. So eventually, it came down to being able to move in the bullish direction. But the key really is not only just this; it's also the clarity that you get from this from here. Look at that. Right after the spring, this is what happened. That means they're ready to move it higher. You know, but the thing is, just be patient. In fact, there's a lot of folks saying, "Oh, trade on initial activity in the morning." you know, sometimes it's just better to wait until all of that initial activity is done, so you can see clean trend or jump on board midway, or wait for the turning point. Because you don't want to be in that activity there. Anyway, have a good day. Bye.